Hi everyone, thank you so much for joining me today. My name is Junior Dlamini, and today I'll be taking you through a few mistakes that I realized that candidates have made in the recent IAC exam that took place in Jan. With the candidates' consent, we have received their scripts, we have reviewed them, and we've identified common areas where we realized that students made quite small mistakes, and we decided that we should put together a video so that we could share this with you so that you don't make the same mistakes and as you prepare for your own attempt of the IAC exam. So specifically today, wanted to address note 6 in relation to paper 2, which was the financial accounting component. Remember, in this question, we had a foreign acquisition. So this company was acquiring solar panels externally from a different country, which triggered IAS 21. Now, a lot of candidates, based on the scripts we've reviewed, were able to identify that this was a potential IAS 21 transaction. However, it slipped their mind that this transaction had a monetary component attached to it. So what do we know about monetary items? Monetary items are always restated to closing rate on the date that you make a payment or at the end of the year. So now a lot of candidates were able to realize that as much as 50% of the purchase price was paid immediately, but the remainder of the amount was paid at a later stage, which had to be restated. And also, candidates were not able to pick up that there were certain costs that were directly attributable that had to be capitalized. For instance, if now you are stuck and you are writing an exam and you're looking at this IAS 16 question and you're not sure whether transportation costs should be capitalized or installation costs should be capitalized or testing for operational effectiveness should be capitalized, it's very simple. Open IAS 16, paragraph 16, paragraph 17. Paragraph 16 tells you what cost comprises of. And paragraph 17 gives you an example of directly attributable costs such as installation and testing. Then you would have realized that all these costs are actually supposed to be capitalized to the PPE item. Now the problem now is candidates were able to determine certain amounts that were correct to be capitalized, debited the PPE item, which is the solar items, credited the bank, and credited the balancing figure as a credit, as a payable. The problem now is candidates didn't depreciate the solar panels now, and also they didn't restate the monetary item to closing rate, which is a problem because now when you have an IAS 16 item and they told you that it was available for use, and then it also told you that it was depreciated on a straight line basis. At that time, candidates were supposed to realize that now it was in a manner intended by management on the 1st of May. Remember, from an accounting perspective, you depreciate when it is available for use, not when it is brought into use. So now it is available for use on the 1st of May, depreciation should have started. So the candidates were supposed to realize that now at that point, we're supposed to start depreciating, then multiply by the number of months to account for how much worth of depreciation are we supposed to have for this specific asset. Another mistake is candidates were depreciating the foreign purchased amount of 1.3 million. The problem with that is this was a non-monetary item. As much as there were two legs to this transaction, monetary and non-monetary, the non-monetary leg was the PPE. So when you debit PPE or debit solar panels, that aspect is non-monetary. That aspect, you're always going to apply the original exchange rate, which is the spot exchange rate on the date of the transaction, because it was carried on the cost model. So there was no need for you to go revalue, no need for you to go and increase its value because it was carried on historical cost. Therefore, you were supposed to say the cost that was determined on acquisition and its exchange rate, you depreciate that overall cost. You don't go and you take the 1.3 million, then want to depreciate it separately using an exchange rate at the end of the year, because that would have been incorrect. So, and also the information in this question, you're not given a lot of exchange rates. So now that would become a problem because some candidates would also be tempted to use the average exchange rate to depreciate the asset, which is incorrect. If it's a non-monetary item measured at historical cost, which is depreciable cost, always use the exchange rate on the date of the transaction, on the date in which it qualified for recognition. And then if it is in a different case, then obviously if it's revalued and you need to determine the fair value, you'd use the spot exchange rate on the date in which that fair value is determined. But also another thing to just pick up is when you have a monetary item, remember you need to restate it to closing rate at the end of the year. With that being said, ladies and gentlemen, should this question or something similar along to these lines come again, please make sure that you analyze properly the question at hand And if you're feeling stuck and you're feeling lost and you don't really know what to do, quickly consult with your IFRIS. It's there to guide you. It's there to help you in getting to the correct points. And make sure that you stick to the time allocated. Don't spend a lot of time now trying to figure out, when do I start depreciating? Which exchange rate do I use for what? Have a thorough and comprehensive analysis. As much as you're not going to have reading time, set a timer for yourself, say for the 30 minutes after they say start writing. I'm purely reading my scenario and I'm analyzing it. And that being said, you're building a very good sense and image of the scenario and the question that you're dealing with, which will make things easy when you start writing, because you're not going to forget things such as I was supposed to depreciate. You're not going to forget things such as this was a monetary item, I was supposed to restate it. And with that being said, all the best. Good luck.